Hello, everybody, and welcome to the Next Gen Planners podcast. My name is Dan, and I'm the head of community experience here at Next Gen Planners. And today, I'm very happy to be joined by Mr. Phil Courtenay from Humans and Money. How are you doing today, Phil?
Hello, yeah, very good, Dan. Thank you. Full of chocolate, obviously, after Easter.
Yeah, so it's just to anyone with future reference, we are recording this the weekend after the Easter weekend, and there's been lots of events and stuff going on over the Easter weekend, but we're all in good moods, aren't we, Phil? So we should be absolutely fine.
Yeah.
So for anyone who doesn't know, Phil, where have you been? He's the founder of Humans and Money. And for most people in the audience, they probably know your name from the name of your business, which was beforehand, which was the Applied Emotional Finance. So if you're thinking, I know that name, hang on a second, that's because they have just gone through a recent name change at the moment. So Phil, can you tell us what it is that you do on a daily basis?
Yeah, of course. Reason for the name change to Humans and Money is because hopefully that describes what what I do. The thing that gets me out of bed in the morning, I guess, is how do people make decisions around money? In particular, how do humans make decisions around money? So that's kind of what I do. That's the question that sort of drives me in my business life and my academic life. And there are kind of two hats I wear as well, actually. So I am an advisor to businesses in the personal finance professions. They tend to be financial advisors or banks or digital advisors, and I help them understand what their prospects and clients really want and what drives them. So to help them attract, convert, and delight clients. And the other kind of hat I wear on the non-commercial side is as an academic researcher. So I set up what was Applied Emotional Finance 2 and a bit years ago. Basically, when the pandemic started, obviously a great time to set up a business, go out on your own. Then had a baby coming along not too long after that as well, we found out. And then I thought, right, let's add something else in the mix. Let's do a PhD as well. I was offered a scholarship from King's College to research this area of financial consumer behaviour in more depth. So that's my other hat as a researcher, trying to figure out what really drives individuals to make financial decisions.
Really good. And one of the challenges that you mentioned in that kind of when you were talking there was the problem that advisors have when they're trying to, I guess, communicate or convey their true value to clients. As in, I think there's still this kind of conception out there, even in my family. When I qualified as a financial planner, people were like, "Oh, right, so you help people with products and sell products and stuff like that." No, I mean it's hard to get that kind of misconception across. But just for the benefit of the audience, what it is, what do you think it is, and why do you think it is that advisors do have this challenge in communicating their true value to people?
Yeah, so we were, I'm not sure if I just mentioned it, we were talking about that before, Dan, this idea of advisors communicating their true value, because there's so much talk around the advice gap, and there's obviously an amount of the supply of advice and being able to meet the demand that's out there. But there's also a kind of a value gap, which is around clients and prospective clients being able to see the true value of a financial advisor, a financial planner. And that kind of that tends to result in people challenging fees if it's clients or prospective clients. It often results in people just not taking advice when they need to and have the means to, because they don't see the value that's there. And it's one of the big questions that I address in my research and my consulting work. And for me, there are sort of three main issues around that value problem. And it's all around how humans think in reality and how we act in reality versus how we are meant to, in inverted commas. If we were robots, took a very kind of traditional economic theory based approach to making decisions, then life would be pretty simple. We would have an idea that if the benefits of something outweighed the costs of that thing, then we would see value, and we would see value and we would take action. And that's very straightforward. It will make lots of people's lives a lot easier, particularly in financial advice. The problems there are kind of threefold. So the first issue that I see is this idea of benefits. And what benefits are, quite simply, is someone moving from a current state, the gap between their current state and their desired state. And that movement between the current state and the desired state is the benefit that we get. And the problem with that on the current state side is that clients don't always know what their current state is, right? So they don't know from a financial point of view if they're overpaying tax, because they haven't had the financial advice to tell them that's the case. They don't know what their existing problems are. Are they incurring high fund costs? Are they, lots of the kind of, even from a rational point of view, there are lots of unknowns that prospective clients have. They also may not have, even on the emotional side, may not have taken the time to comprehend what the current state means. So they might be anxious about their financial matters. They might have a lack of sense of clarity or control over the future and what the future looks like. These are the big problems that financial planners help clients with. But have they taken the time to reflect that that's a financial issue, or do they just feel uneasy in general? Because often people don't spend the time to pinpoint what that angst is, that financial angst that they have is. So part of the issue there is that people don't really understand what their current state is from an economic point of view or even an emotional point of view. And then the other side of that gap from current state to desired state is they don't know what's possible. So I might think, I just hate money. I'm anxious. I hate to look at my bank balance because I've got no idea what I'm going to do about the future. I know I don't have things in place to protect my family if I'm not here, but it's just a worry. That's not me. I just don't get involved in those things. If they haven't had exposure to financial advice or to people who may have engaged with financial advice, they may not know what this desired state could look like. And they don't know that financial advice is the answer to provide it to them. So that's the first kind of gap there, is we have this very sort of simple idea that someone knows what they want. We can provide it to them, we being the financial advice community profession. We can provide it to them, and that's where the value is. But there are real differences between the amount of information that people have to enable them to see that value. Does that make sense, Dan? That kind of gap is one of the big issues.
Definitely does. And I think this is the is the kind of the wonderful, beautiful change that we've seen over the past maybe 15, 20 years, from this move from the traditional type of transactional advice of the, should we say, 70s and 80s and 90s, towards this more kind of, let's really understand what the client actually wants and or needs, and then work the money around that. Because I was talking about this to someone, I think it was Natalie Taylor from Monarch Money a couple of weeks ago, about this idea that if you ask someone what they want or what their goals are, what they want to achieve out of their life, they don't know. I mean, if someone asked me that question, I'd be like, I don't know, really, to be honest. Some people have a very clear idea, and then some people are like me, just kind of rolling with it. And it's all about getting kind of the values out as well. And that kind of comes into this conversation as well. It looks like you were going to say something there.
Well, that's what we're talking about there. And I think I listened to that podcast with Natalie, really interesting, is kind of the second part of this value issue as well. So what are benefits is kind of question one for me. What does that look like, that gap between current state and desired state? And then we've got this other issue around helping advisors communicate their value, which are what I call translation issues. So you've just kind of hit one, nail on the head with one there, which is translating that very broad kind of esoteric concept of goals to me as an individual. I care about what my goals are, but what does that mean? Is it about, I gave the example, making sure my family's protected after I've gone? Well, again, what does that look like? Do I want them to be able to keep the house if I wasn't here? When we talk about living a desired lifestyle in retirement, what does that look like? And the translation issue there is, again, the difference between assuming that we have perfect oversight of what goes on in our own minds. We know what drives us. We know what we care about. We can be very specific about these things. We know what our goals are and our responsibilities and all those things, and how we actually operate as humans. And we're motivated in different ways as humans. We go through different phases, different motivational states as well. So I might be motivated by achieving things, by progressing, by fulfilling goals I want fulfilled. On the other hand, I'm also at different times in a prevention state, we call it, where I'm motivated against avoiding loss, about fulfilling duties to my families and my friends, about fulfilling my charitable duties to others, about making sure that I don't lose the things that I've got. So there are those kind of translation issues that one message that we might communicate to one prospect or one client might be very differently received by someone else. So there's that kind of translation barrier. And when we hear about nudges and a lot of the sort of behavioral science literature, this is probably the big area that's paid attention to, how we translate that message in a way that's specific, that's salient, that makes people really kind of visualize what they care about, what the future might look like, in a way that creates urgency for them. And lots of dozens of different kind of tools that we can use to overcome that translation barrier. But that's the big one we need to bear in mind. How do we get the benefits, the value from the advisor, the planner, from what's in their minds, what they know really helps their clients and prospects, to actually hone in on what's going to resonate with the people that they're talking to. So that's the kind of the second barrier, the second challenge that we were talking about with value. And I think your and Natalie's conversation hits the nail on the head with part of that as well, the specificity angle of that.
Yeah, I get you kind of talking a bit there about like kind of the idea of, was it Hertzberg, the motivational kind of, they've got the hygiene factors, which is the things about like, the things that you kind of expect in life that don't really motivate you, and they're things that you kind of, I don't know, you maintain. And then there's things that actually motivate you on the top half, which are things that you potentially don't have. And those perhaps could be the benefits that you're talking about there. They're the things that go from your current state, which is effectively the hygiene state, to what actually motivates you to a higher level. And again, another, I don't want to sound like too much of a kind of wishy-washy philosophy here, but that's where kind of the hierarchy of needs and stuff like that comes into it as well, about getting to that kind of self-actualization point as well, isn't it?
Yeah, the motivational state stuff is called regulatory focus theory. The concept that we have two different orientations, two different states we operate in. So one where we pursue gains, and one where we avoid losses.
Yeah,
and they can kind of happen at the same time. We can be just in different situational states. But the point being there that one message to you that someone might talk to you about, Dan, versus talk to me about, we could be driven at that point in time by entirely different motivational states. And the message that completely resonates with you about your goals and progressing and living the lifestyle that you want falls on completely deaf ears to me, who might be in a different motivational state. So they're the kind of the objective benefits we're talking about to start with, the current state versus your desired state. That's challenge one, making sure that we can communicate that, can help someone understand what the current state is and understand what could be available. That's the first challenge. The second challenge is that translation gap, making sure that we can speak in the language that's going to resonate with the right people. And actually, the third challenge there on this kind of value equation of, if the benefits outweigh the costs, then you take action, is understanding what those costs are. So in the profession, we talk about fees a lot, right? a lot.
Yeah.
And different fee models and what fair pricing looks like and so forth. One of the things that we talk about far less frequently are the other costs involved in financial advice. And I think of those costs as economic, emotional, and effort-related costs. So if we think about economic costs, yes, the pounds and pence or the dollars, the cents of what those fees are is important, but there's also economic risk involved. I mean, the risk that I might be paying for advice and not get the advice I need, not get it may not be good enough quality. It may not give me what I want. Yeah. Then there are effort costs. So I have to exert effort from a cognitive point of view, cognitive effort, to try and figure out what my report means. If I'm not too versed in the financial domain, I don't know what all these numbers are, and I have real ambiguity trying to figure it out. It takes a lot of cognitive effort there. I have to figure out whether I want a financial advisor or a planner or a coach or a wealth manager or an investment manager or a portfolio manager. What does that mean? There are costs involved in terms of the cognitive effort required to engage in an advisor of some kind. And then there are emotional related costs as well. So I might feel guilty that I should be able to do this stuff myself. I should think, I'm a smart guy. Why can't I just manage my affairs? It's all over the news. Surely I can figure out how to invest. I might feel a lack of control if I engage an advisor and I have to give up this responsibility for my finances that I feel like I should be responsible for. And there are many other emotional costs that are involved in taking advice. So if we think about that equation, benefits and the costs we need to consider not just the financial costs, the fees that are incurred, but the risk involved, the emotional costs, the physical or the cognitive effort people have to spend. And if we can reduce the perceived costs involved in advice, then that fulfills the other part of the equation. That's what stops a lot of people from taking advice when they know they should, they know they know that they're paying too much tax, or they know that they don't have clarity over the future and reassurance and security. They know that financial advice could give them that, but they perceive these huge costs, emotional, economic, and effort-related costs of advice that are actually stopping them. They're creating inertia and a barrier for them to seeing the full value of advice and to, importantly, engage in advice when they know they could and should be.
It's good. It makes a lot of sense. Rather than just the kind of, I always talk about fees, and I always say, like, why are we talking about fees on a public domain? It's like I've stopped also referring to people's clients as client banks, because then that just makes them sound like their money.
Yeah.
All these little language changes and things like that can have a huge impact as well. So, let's just kind of finish this point then. So this stuff about translating and really kind of communicating better with their clients and prospects about this kind of stuff. How can financial planners, and probably come back into the things that you've already talked about, but how can financial planners actually work this into the stuff that they do with their clients and prospects?
Yeah. I guess the first thing is thinking about those three parts, because it's not just a case of how can we shout louder about the benefits of financial advice. That's often the kind of the go-to. If people don't see the value in financial advice, how can we educate more? You hear the word education a lot, and there's certainly a place for education. If we think about what I've just said about the current state, the desired state, the translation issues, and the costs, education is a tool that people can use to paint a picture of the desired state of what financial advice could do for you. Mm-hmm. It doesn't necessarily address those other three areas: helping someone understand what their existing situation is, overcome those translation issues, and helping them helping overcome the emotional, the economic, and the effort-related costs that they incur. So the first thing is to think more broadly, I guess, than just education. How can we convey the true value of advice? And for someone listening, how can you convey the true value of your advice and what makes you different as a business and as a financial planner? Well, think about each of those four steps. When you're having a conversation with someone, how can we make sure that we understand their current state and that they can understand their current state? And in particular, I use this kind of framework that I walk planners through that helps them consider the knowns and the unknowns that a client has. So they might know, because they've had a conversation down the pub or with a colleague, that they might be overpaying, or they should probably invest some money. They should probably not hold it in cash in the bank or something like that. There'll be lots of unknowns that they don't know. So it's for the advisor to paint that picture with the knowns and the unknowns to help a client understand their current state. Then help understand what advice can do for them. Paint a picture, make it visual, talk about specifics around what could that future look like for you? What do they really care about? Is it making sure that they can buy property for their daughter when she's 35? What are the specific salient things that are motivating that person, paying attention to the language that they use as well as clients. Yeah, don't want to labor this point, but you're talking about goals earlier. Very, very rarely in my interviews, my research with advised and non-advised investors, individuals, have I heard them really talk about their goals ever, even using the word goals. I don't think, because that's a label we use, but what's the language people are using to talk about their own concerns, problems, angst, the things that are keeping them up at night?
Yeah.
So the first part, I guess, is making sure we pay attention to the 4 areas that I've mentioned. And then in terms of a kind of structured way to actually apply that, well, there are different touch points that advisors, planners have an opportunity to communicate their value. It might be in their marketing materials at the first stage. It might be in the initial discovery meeting as part of their process. It might be on their website. It might be in client reviews or even reports that people are given. And at every one of those touch points, those communication points, there's an opportunity to think about those 4 steps. So we can systematically go through this. If we really want to communicate value, to get to the point where people aren't just willing to pay our fees, people are happy to pay fees because they see the genuine value that it adds. Yeah. It's about addressing it through every stage of the business, from promoting what you do, presenting it, and then reporting on it to clients and prospects as well. There's a guide that will be live after this podcast that I'll share. I'll just go through some of these things, a free guide. If you go onto humansandmoney/nextgen, it will be available in there. So the things I'm talking about, the practical steps people can take, I'll go through in a bit more detail on that as well. So hopefully useful to your.
That's cool. Listeners. I didn't know that. That's a surprise to me as well. I didn't even know. That sounds really good. Yeah, that's fantastic. This is, I mean, just to kind of finish this point, I mean, this all comes back to that kind of old saying of, I know the kind of language around it isn't perhaps right, but to sell a good night's sleep rather than to sell a mattress. No one wants to buy a mattress, but they want to buy a good night's sleep. No one really, really wants to pay a financial planner fees, but if they understood the benefits of what it's going to be and the kind of return on investment that they will get, they're more likely to be open to actually doing that in the future, I guess. I
haven't heard that analogy before, but this may or may not work. I'll go a step further as well and say, do people who want a good night's sleep, or do they want to make sure that they don't feel groggy on that commute in the morning that they hate in any case and want to be switched on, or when they get to that 8 a.m. meeting in the office after a good night's sleep, they will perform better.
Yeah.
Or they will smile when they go and get their child out of bed rather than the kind of dreary-eyed sort of moan and groan. And it's that outcome. We can provide a good night's sleep. What does that good night's sleep mean for person A versus person B versus person C? And that's the nugget. That's the bit that we need to that's valuable for them.
That's really good. It's like knock-on effects kind of thing, which is excellent. Yeah. Just a quick point then. So there's a lot. I mean, there is a kind of a lot of discussions at the moment about the FCA's consumer duty and things like that. Just a quick one. Does this kind of stuff fit in with that FCA's consumer duty? And maybe a comment on that as well.
Yeah, sure. Yeah. Yes, is a short answer. And I'm kind of two angles there. The concept of understanding human behavior, which obviously is where I operate, is getting a lot more kind of airtime from the regulator, obviously from the profession in general. But one of the things that the FCA's started speaking about a lot more recently is the concept of behavioural approaches that people take, and in particular, they're cracking down on sludges. And sludges are kind of the opposite of a nudge, where we want to encourage someone to do something positive for them and for their finances. A sludge is something that puts kind of friction and inertia into the process. So the sludges might be high exit fees, or a very complicated process to switch product or advisor, or to action a decision that a client might want to make. So there's certainly a lot of that spoken about in the consumer duty, and this approach that people need to be putting clients genuinely at the center. Firms need to be putting clients genuinely at the center of what they do, and making sure things are behaviorally optimized for a client's benefit is a big part of that. And then more specifically, we've just been speaking about value, communicating value. This concept of fair value is spoken about a lot in the consumer duty as well. I think it's now July and summertime when we're likely to have the finalized guidance around this. But one of the 4 outcomes that the FCA has proposed is this concept of making sure that fair value is received. And I would say, to understand fair value, we as a profession need to think about what do people value, what are we really providing that's valuable, and then making sure clients receive that. So it starts with the firms understanding what value means to them, and then making sure they can deliver that to their clients. So I mean, definitely most of what we're talking about here is likely to be included in that FCA consumer duty guidance.
I mean, I assumed it would be, to be honest, because like you said, this kind of stuff is very, very kind of popular at the moment, and it's growing. And I see a lot of it about, people explaining what they do, and they say that they're kind of more than money managers, they are people managers. So managing people's behavior is one of the most important things that financial planners do. As in, don't do this, do that, or that's going to have a negative. It's kind of things about what you mentioned before about protecting against downfalls and making sure that you can go towards your goals as well. It's good. I wish they weren't so ambiguous with their kind of descriptions of guidance, though. Like fair value. What does that mean? That's just 2 words strung together. Like one person's fair is another person's not unfair, and one person's value is another person's I don't know what the opposite of value is. Is it unvaluable? I don't know. It is now, anyways. I'll just make invaluable. That's it. Okay, so let's move on, because we don't like to talk too much about that kind of stuff about the FCA on the podcast. So you mentioned a framework before, but you also have another kind of process that you use with people. It's called the SHAPE process. So that's in capital letters SHAPE. Can you just tell us a little bit more about what that kind of process is and how it fits into everything that we've been talking about here as well?
Yes, yeah. So the SHAPE process is a process that I go through with firms to help them create changes in their business. So everything I do, the kind of the approach of humans and money is about building on the science of decision making, the science of advice, basing change and the guidance on evidence. And one of the things that kind of became very apparent to me quite early on in this journey was that when companies are interested, when businesses and advisors are interested in making changes in their business, be that embracing behavioral science and understanding how biases and heuristics and things work and applying that in their business, there's often difficulty in the application part. I know that people are driven by emotions, and there are these things that happen, and I know that what we do has far more value than just the financial benefits alone. But so what do we do about that? So the SHAPE process that I use goes through 5 stages, from scope, harness, apply, prove, and extend. And it's really a way to think about a commercial problem that my clients have, and go through a modular process to break it down and make sure that you get an answer that works. So an example might be something that starts as a fairly broad challenge. So you might want to increase client engagement, or increase grow the business. A kind of very broad issue. So the first part of that scope process is to figure out what the real problem is. So when we talk about growing a business, where do we need to focus? Is it on attracting people? Is it on converting existing leads? If so, who are the people? What are the areas of people where we're struggling at the moment? Are they of a certain demographic? Are there certain requirements? Are they a certain lifestyle? Do they tend to be people coming up to retirement that we're really struggling with? If we're talking about clients experiencing improving engagement, what do we need to do? Do we want to increase retention rates? where are we seeing attrition at the moment and why is that? So the first part is breaking down big problems into small actionable ones. And that's probably the most important phase, actually, because we can't deal with big problems in a systematic, evidence-based way, because they're just, we have to just try a lot of stuff and we don't know which things work and why. So scoping the problem, what's really driving this issue? And that scoping process involves looking at data, what are clients doing it and saying, and sometimes surveys or some kind of feedback from clients as well. I tend to be quite against surveys if we can avoid them, because people don't often know why they make the decisions they make and so forth. So once we've scoped out the problem, we go to harness, which is harnessing the behavioural research that already exists, because there's so much work in the academic literature and the commercial work that's been done that helps explain why people make decisions. So what do we already know that we can apply to that problem? Then the apply phase means what changes would we make in the business? So for a digital advisor, that might be changing part of their advice process, the advice journey, or it might be changing a proposal template, or the process that advisors go through. Make that change and be able to track the outcomes of that change to prove the fourth stage, P, that the benefit that arises from it. And then when we know that we've had this problem, we've broken down where we need to address a behavioral change amongst our clients or amongst our staff internally, we've proved that it works, then and only then do we extend it across the organization. So that might be after the pilot of changing that part of the digital advice journey, we then extend it across all clients, or we change that template or the wording or the messaging for that client report, and then we extend it across all clients. So it's just really a very systematic way to go through applying behavioral change, which is what we're talking about ultimately, to a business in quite a modular way, where you can kind of see what's going on rather than just, there's a lot of fancy behavioral science stuff. How do we apply it? It sounds very complicated. What do we do?
Yeah, it's brilliant, because you're so right there. It's a systematic way. Anything in a system, I think, makes everything so much clearer. And it also, what you were talking about this in the scope part at the very start there, about this kind of, if you set yourself with an objective or a goal at the start of the year. I mean, we like to set big goals, don't we? Because that's just the way that humans are. If you look at that, you'll be terrified by it. But if you start to break it down into perhaps month by month, or even week by week, or even day by day, and think, what are the little incremental things that I'm going to do on this daily basis or whatever, then it starts to become a lot more achievable. And that's when you can start to go down the system that you were talking about there of harness, apply, prove, extend as well. Exactly. I love it. Yeah. I think everyone should have a framework for what they do, or like some kind of process, because they really do work and they really do explain what the process that you go through as well. I'm talking a lot about that with people actually at the moment, about building their own frameworks and building their own kind of processes just like this, so that clients understand exactly what they're going to go through. I think it would be a really good thing if financial planners could have a named process that they have with their clients. It would be amazing. It would be fantastic.
That part, I know I kind of hadn't planned to talk about this at all, but it fits in with value, this kind of topic and human behavior around finances, which is the being able to paint a picture of what you will do as a financial planner is really important. When we speak about I was talking about the costs earlier and the effort related costs, well, there's a lot of ambiguity. One of those effort related costs is ambiguity. There's a lot of ambiguity in financial advice, because people don't know what they're going to get. If I engage with you, if I engage with a financial advisor and they say, here's this picture, this dream picture, I will give you clarity over what the future looks like. And we'll be able to do some cash flow modeling. We'll be able to give you reassurance and all these things. I might have a huge motivation to want that. That sounds great. But the ambiguity is, what do I need to do? Do I sign documents? How does that work? Do we have a regular meeting? Is it all on you? How long will that take? All of that kind of stuff. And I think when I completely agree with what you're suggesting there, this having a framework or a process for financial advisors to go through, one of the slight issues that I have with how that's often implemented at the moment is that it can be quite vague. So people talk about in very generic terms. We'll go through some discovery. It will be kind of a 3 to 6 stage process. So some kind of discovery and then reporting, and they'll kind of talk about this in fairly generic terms. But if I'm dealing with a retiree, then how powerful is it to say the value in what you get? Here are the tangible things you'll get afterwards. You'll get your retirement plan or whatever it might be, something far more exciting sounding than that. But here's the asset that you get. Here's the actual deliverable that you get at that stage. You'll have this future setting meeting that we have there. You have these assets, these stages, these deliverables that are specific to you as someone who's about to go through retirement. It wouldn't make any sense to someone who's trying to sell their business or to someone who was trying to save their first mortgage. We're making this process very specific, and we might have 3 or 4 of those different processes depending on the offering, whether it's to someone's aspiring to retire, or whether it's someone who's saving some money or trying to put protection policies in place, or passing on wealth, whatever that might be. But creating a very specific process, because there's so much ambiguity at the moment when people talk about what they do. It's in such broad terms that it could apply to any business. And I always think that the test is, if you had on that process, if you had it written down and you put someone else's logo on that document, would it still make sense? And 99% of the time, the answer is yes. So the more specific firms can get about what they actually do, what they actually deliver, what's that stage that's unique to them, what's that conversation, what would they call that conversation, what makes that conversation different to what everyone else does, that's the kind of gold dust in what they do, and that's the bit they really need to articulate, and it's so powerful to articulate.
Yeah, and it gives them a tool, it gives them a way to articulate what they do as well, because you've got the framework, and you can promote that framework, and it just breaks it down a little bit more as well, and also about you mentioned there about producing the tangible benefits at the end, to make sure to people, where is the end goal, where are we getting to with this, really works really well as well. Okay. I didn't realize how long we've been talking for. We've been talking for 37 minutes. This time flies by when you're having fun, doesn't it? So when we think about the future and the way that where we are today, the current state, shall we say? What do you think that the future of human behavior holds for financial planners? So the people in the audience, what do you think it holds for them?
I would say, wouldn't I, that I think it's becoming ever more important, and I do. I think for financial planners, that the financial planning role has changed, right? From, or at least the perceived role, from one where people were kind of information brokers before information was readily available and before there was too much information, I would argue now, too much noise, to this kind of wisdom broker situation where the wisdom is applied to help someone achieve what they want to achieve. Now, the reason I think that's important is what we're talking about isn't just, 20 years ago, you could provide some information that people couldn't otherwise access. There was a real kind of incongruence between what the client knew and what the advisor knew, what the planner knew. Whereas now, the planner's role is so much more obviously around engaging with the human, helping them achieve what they want to achieve. In order to do that, in order to voice that, in order to do that properly, we need to understand how humans behave. What are the things, not to labor the point about costs and desired states and current states, but what does that look like? How can we paint a better picture? How can we get our message across in a way that resonates with people? How can we understand what their perceived effort and emotional and economic costs are? Without understanding humans and often the kind of unconscious things that are going on there, it's very difficult to know how to deliver a great service, how to market a great offering, and how to grow a business effectively. So I think understanding human behavior is only ever going to increase when there's just so much competition from lots of different angles that a financial planner may not have even considered as competition a few years ago, and probably shouldn't be considered as competition, but from a client's point of view is considered as competition. That competition involving them doing their own research on Instagram or whatever for,
Yeah.
some kind of crazy things that people compare to financial advice, which of course isn't financial advice, but without helping clients understand that, helping understand the human behaviors that drive it, there's always going to be an issue. So
Yeah.
I think it can only ever be a positive thing for understanding clients and prospective clients more accurately, can only ever be a positive thing for the profession and for individual planners and advisors in their businesses.
Yeah, absolutely. I love the idea that about this kind of the difference between information brokers and wisdom brokers. I always say to people that you don't want to compete with Google. And we're not looking to compete with Google because the information. I agree with you. There's too much information out there. That if you want to find something out now, it's so easy to find that out. You might have to do a bit of digging, but you will find it eventually. So therefore, the internet doesn't need another blog about pensions or relevant life cover or something like that because it's already covered.
Yeah.
What people need is your wisdom on how you're going to actually help people get there. And just quickly, I'm a big fan of analogies. We do analogies all the time on the podcast, but this can apply to other professions and things as well. So like, for instance, if I'm looking to get my bathroom done or like get a new shower fitted in my bathroom, I can pretty much find loads of videos and articles online nowadays about how to do it myself. But then once you realize how difficult it is and how tough it's going to be and all the tools that I'll need to do and all the corners that I will need to avoid cutting, it is then much easier to just go to a plumber and say, let's make, and that's where the value comes in. That's the value of saying, so I know that it's going to be done right. And I know that in 6 months' time, I'm not going to have a pipe burst because I did it wrong or something like that. Like that. I love the kind of analogies between financial planning and different professions. Because they work so well. And I guess that kind of comes into it as well. There's too much information out there about fitting your own shower, but you'll almost always get a plumber to do it because you know that they're going to do it well. They're going to give you the value of actually doing it in the first place.
I love that one. So someone, a financial planner, I won't name him because he may not want me to. may not want me to. He gave me advice when I was first kind of going down this route. He said, just fix my effing boiler. I won't swear because there might be, I don't know who's listening to this. And it's the same kind of thing, on a cold day. That's just, it's the urgency that you need. It's the, that's where the value lies. It's in getting to that desired state, being warm, and moreover, my baby not crying because he's cold or whatever. You can be even more specific about that. Getting to that desired state in a way that costs as little as possible. And the biggest cost there would be effort related, which is I need to spend a hell of a lot of time on YouTube to figure that out because I'm not very adept when it comes to plumbing systems, and I don't want to go through that pain. So I love that
Absolutely.
one, Dan.
It's good. Sorry, everyone. I'm a master of these analogies. And people probably get fed up of them over the time. The next question is a big one, and we always like to think about the kind of the knock-on effects of this kind of stuff. So, for instance, I asked this question when we talk about financial education. I often ask the question of if everyone was better financially educated, shall we say? So, if everyone had a basic level of financial education, what would the world look like in the future? And we can dream of that world and what it would look like in the future. But in this case, I'm thinking about the kind of unconscious behaviors that we have around finances. Everyone has them, and we don't know they're there because they're unconscious. So if humans could overcome the unconscious behaviors around their finances, what do you think that the impacts on society could be in the future?
Wow.
Yeah, it's a big question.
If we could overcome the unconscious behaviors, what would the impacts on society be? Huge. I would say so. The first thing is you weren't ever going to get a short answer to this question, were you?
No, that's fine. That's all right.
The first thing would be it's very difficult to overcome types of behaviors, unconscious behaviors. And by that, I mean, it's often far easier to work with the things that drive us and motivate us than try to overcome them, if that makes sense. So if we can, I heard this an event I went to, a marketing event when I was working for a wealth management firm about 6 years ago. And someone was talking about education around pensions. And he said, in no other industry would you say people just need to be more educated about iPhones. That they just need to understand phones more because they're just not buying enough of them. they're not investing in their gym memberships enough, so we just need more education around gyms. It's their fault for not buying our things more. And I think that's quite telling, because from a financial perspective, if we can work with the unconscious behaviors, by that I mean the things that we already know help people take action. So things that are simple for them, things that are the default way that leads them down a particular path that's going to be beneficial to them. If we can make things simple and feel easy and straightforward and reduce the costs that are involved, we're actually working with unconscious behaviors. If we can do that, then I think the options are kind of limitless. We have huge financial issues globally. There's a retirement savings gap. There are different retirement savings gaps for different cultures, different demographics, women more than men. There are people who are very unhappy about their financial situations. Some of those who are in precarious situations, some of those who are in very comfortable situations. There are all of these things that we can do. If we can, and this is kind of, I guess, thinking about this is what really drives me as well. If we can make people feel better about money and use money as a tool for happiness, kind of big picture stuff there, all right, then that's hugely important and has huge potential. If we can encourage people to increase savings behavior, take risk when they need to take risk, don't take risk when they don't need to, because actually sometimes we just need to feel happy about what we've got. All of those things, if we can work with people's unconscious emotions and behaviors, then I'm going to make a very bold statement. I think we could change the world. I think we could change people's happiness in general and their genuine objective measures of well-being as well.
That's cool. I've never really thought about working with rather than working against before. I mean, I think you probably might agree with this, but the difficulty with trying to overcome unconscious behaviors is that we don't know whether they're in the first place. So if it was a conscious behavior, if we knew it was there and someone told us you need to change that, you'd be like, yeah, I probably do actually, because it's not very healthy behavior. But if it's an unconscious behavior you never knew existed before, and someone tells you you need to change this, they'll be like, what are you on about? I never even knew I was doing that in the first place. Yeah. And it doesn't, so perhaps the language and translation and communication needs to change there as well. I often talk about this, the kind of idea that, I showed my friends the compound interest calculator of where they could get to in the future if they just put £50 a month in and there was this level of return, all that kind of stuff. And they're like, wow, that is amazing. But I know that the next day they've forgotten about it already and they're not going to do anything about it. So something else needs to be done. We can't just educate people. We need to do something else that I don't have the answers, by the way, but we need to do something else. And I think what you were talking about there comes into it, definitely.
If you took a form, if you took an iPad to that person, showed them the calculator, your mates in front of them, set everything up, populated all their details, said you just need to sign here if you want to contribute £50 a month, it'll come direct from your employer, yes or no. I'm not saying everyone would do it. I'm not suggesting you should do this, but you'd have a far greater take up if you can reduce the friction, the cost involved. And if you look at, I always think, how do we get this behavioral science, human behavior stuff from this very kind of philosophical, esoteric situation to the real world? If you were to look at the business of Amazon, there's a reason everyone knows it, because they are so finely attuned to human behavior. If I look at the process I go through, I've bought 2 things from Amazon this morning. It's 12 o'clock now, 2 things today, and probably every other day. There's one-click ordering. I pay for my free delivery because it comes out of my bank account with Prime every month. So my delivery is free. That makes me feel good. There's social proof there. Everything's reviewed. I can log in. It's all automated. It's Face ID and stuff now as well. It's so easy for me to spend money that they're so finely attuned to that. That's working with behaviors. They know that if I had to put in my password every time, it didn't save my details, and I had to put in my address each time or put in my card details, I'd probably buy 10% of what I do. But if we can work with behaviors, then, as Jeff Bezos would say, they really have changed the world. But hopefully we can do it in different and better ways in finance as well.
It is. I think it's a lesson that we can all learn as well, isn't it? About like if we're introducing new things into our business or something like that, or introducing new processes, if it adds anything on to what the client's going to have to do, then it needs a rethink. Because what we should try to do is to try to take things away from our customers and clients and what they're trying to do, and not add too much burden onto ourselves, but try to take away from what they're doing and make it as easy and as simple as possible for them.
Yeah, agreed.
Well, okay, right. Well, we've got through. I'm going to stop. I'm going to stop hassling you now with all these questions. So we do always like to ask our guests for a book that has helped them in their career. It could be a book, it could be a podcast, it could be a movie, film, whatever it is. What would you recommend our audience consume?
Podcasts. I hadn't really thought about podcasts. Well, mine's a book. Mine is Essentialism by Greg McKeown. Okay. And there's a new book he's released, which is great as well, called Effortless. Essentialism was a kind of, it's one of those books that opens your eyes to think, I know this stuff already. It's so obvious, but it still kind of inspires you to do stuff. Is the principle about just making things easy. Don't do stuff that's not necessary. Take the easy option. That's okay. Do the things that make a difference. But he talks about it far more eloquently than I just have, of course, and it's far more interesting. But fantastic book, Essentialism. Fantastic.
There we go. Brilliant. I love that. I love that part of the podcast because we get a different one every time, and it's really cool. I have to admit that half of the recommendations I don't get time to actually take in. So maybe one week or something, I can just book out some time to actually go through all the recommendations that people made. That would be good, wouldn't it? Yeah. Well, honestly, mate, thank you so much. It's been a really, really good show today. It's been a pleasure chatting with you, as always. We do like to give the last word to our guests to say thank you for joining us on the show. So can you tell our audience where to find you, how to connect with you? And I always shock people at the end. Well, you probably listened to the podcast before, so you know, but I always like to ask people for a bit of motivation as well. Send our listeners away feeling inspired as well.
Well, that's a big ask. I wasn't prepared for that bit. So in terms of where you can find me, thank you for listening. You can find me on LinkedIn. It's probably best, Phil Courtenay. Check out the website and download the value guide for financial planners at humansandmoney.com/nextgen. Inspiration. I think I kind of had tingles. We were talking earlier. How can we change the world using human behavior? I think financial planners have a massive opportunity to improve the financial and overall well-being of clients and people who don't even know that they would benefit hugely from advice. If we can communicate your value perfectly, succinctly to the people that it really matters to, we can engage more people in financial advice. If we can change the world for the better, then I think there's a huge positive opportunity there. So thank you for all the planners that are listening and doing that. And excited to help many more. Brilliant.
Thank you so much. What a nice way to finish. So that was very inspiring. So you did a good job off the cuff there as well. Thank you very much, Phil. So that was Phil Courtenay from Humans and Money on the Next Gen Planners podcast. If you enjoyed this podcast, you can share it on Facebook, Instagram, Twitter, LinkedIn. And I keep on teasing the idea that we're going to be on TikTok. We will be at some point, but for now, we're not on there. And you can listen to it on Spotify, Apple Podcasts, Google Podcasts, and on our website, nextgenplanners.co.uk. On there, you'll find more information about the community. So we've got over 730 awesome people in there at the moment. We've got the training contract, the Future Leaders Program, the Blast Off Program, our new product, which was released recently called Advice Stack, and also the conference, which is coming up in, oh my God, it's about a month away now. So we've got a conference coming up in May and June this year, which is going to be amazing. And you can find tickets for that on the website. And also, I always like to finish with just asking if you could just leave a review. So tell us what you think. If you could leave a review of this podcast, that really does help us. And of course, follow us so you'll be notified when new episodes are released as well. But I'm going to stop yabbering on. I'm going to let you get back to your day. Thank you so much to Phil for joining us on the show today. Thank you guys for listening as always, and we'll see you in the next one. Bye-bye.